Hello and welcome to Jazz After Dark. Oh wow, it's kind of far away. I apologize for that. Hope you're having a good evening here. You don't want to see this face made for radio anyways. We've got our Chattanooga whiskey here. Hope you'll join me with a little drink. We're going to review some data tonight from Realtor.com. So if you don't know, peanuts. Somebody got me peanuts. If you don't know, we actually track Realtor.com data when it's provided. Zillow used to be really good at it, but Realtor.com has a more consistent set of data that they allow you to take, really, and just kind of mock it up however you like. We track it because inevitably clients will ask, is it a good time to buy a house? And so I'd like to know some of the data before I give them their, my advice. Now, of course, I'm always going to focus on, do you have enough money, right? Is the dollars there before we do this? But then if someone's looking to buy an investment property or maybe a second home or something, it's kind of fun to be able to say, well, I'm in tune with the data. And so we all track that here. I won't waste any time. We're going to get right into it with the data that we've taken mocked up for you so you can kind of see how things are going. And let's see how things are going in your neck of the woods, because here in Florida, we don't notice much of a slowdown. It's going pretty strong here. So you tell me what's going on. All right, let's look at the data here. So Realtor.com, this is their data, not mine actually. So first we'll start on the left here. Number of active listings. This is your blue line. So active listings are falling. Number of new listings are falling. Number of pending listings are pretty much flat. What that tells you is this is basically a quick snapshot of inventory. Is inventory rising, meaning are there more listings, more new listings, and contracts or houses going under contract, presumably? The answer is no. So we have, although it's better than it was, we have a decline in the number of active listings and a decline in the number of new listings. That tells you that competition is not as steep as it was if you were selling your property, of course, right? If you're a buyer, it's a little bit more challenging, right? Because there's less inventory for you to choose from, and sellers may not be so eager to work something out with you. Not only that, where in the hell are they going to go, right? They have to pay a higher price and a higher interest rate for the next property. So presumably that's a lot of people saying, I'm not going to sell my house. And therefore, you have inventory issues there. So not the greatest sign to get things started. Because of these inventory issues, I shared this on the closing beat, but we're going to expand on this here tonight. Because of the inventory issues, you notice that the median listing price, and for fun, price per square foot, median listing price is kind of flatlined. There hasn't been a real pullback in the price of houses. A tiny bit there, right? But we all expected, wow, that's going kind of crazy here. Maybe it'll pull back. Well, instead, it's marking time. That's what we say in the equities world. It's marking time, letting the averages catch up so that at some point you go, well, that's not a bad price. Well, that's definitely not now, but that's what you have. We zoom in a little bit further here. We're going to look at median days on the market. This is national data, by the way. That'd be over here. Median days on the market, slight down tick there, so still a little bit of transacting going on, but our median days on the market is still elevated in the ultra short term, at least as far as year to date, right? Because this would be right about here would be the beginning of the year. So median days on the market hovering just over 50 days, closer to 55 days on the market, which really isn't that bad if you think about it. Certainly saw worse during COVID, right? Or the beginnings of COVID. Okay. Now, this one can be tricky, so let me break this down. The net percentage of listings that are raising versus lowering their price. The line is going up, and so if I just posted this on social or something, you would think that this means more people are raising their price than lowering. In fact, that's not true because 0 is way up here. So anything below this line right here means there's a greater number of people lowering their price versus raising it. However, it's less people lowering their price. So if we go back to just at the end of last year, we had the greatest number of people lowering their prices versus raising them. Now, we still have just about 16% of people lowering, or listings, lowering their price. However, it's not as much as the 22. So that's an improvement, although it is not raising prices. I want to be clear on that one because when I plotted it, I was like, maybe there's another way we can do this. All right, breaking it down by region here. This is, again, not my data. This is Realtor.com's data in this case. What we're looking at is the number of active listings. We just want to know, and we can probably guess that they're going down because of what we just saw 2 slides ago, but the number of active listings falling a little bit more rapidly in the southeast as well as out west, right? Slight dip here in the northeast and the Midwest. I sound like a weatherman. And in the southwest, for whatever reason, the number of active listings is actually increasing. If you're political, you would say, oh, it's because people are leaving the West, man. They're going somewhere else. I don't know. You know what I mean? I just know someone's going to comment on that. I don't know why the number of active listings have risen. I know there's some tax changes over in California. That could cause people to want to sell, not necessarily leave the state, but, maybe want to sell and downsize or something. I don't know. So number of active listings, in other words, inventory by region is mostly lower, with the exception of whatever's going on in the Southwest. Median listing price by region. There's actually 2 things you could gain from this here. The first is the obvious one. First of all, since COVID, we know, cut this in half right here. So this is pre-COVID, everything over here, right? We have a normal, stable 3 to 4% rise in home prices per year. Not every year, but a nice average. And all of a sudden, if you look to the right, this is a more rapid increase, right? Things are trending along smoothly and then quickly go away, right? Out west, this was more pronounced. So we have normal, stable, although a little bit faster rises in home prices. But since COVID, it's been on a tear. Now, we're kind of out of that world right now. We're kind of getting calmed down, right? Hopefully, we can all take it easy. But we have out west, prices essentially flatlining. Okay, if you look out in the Northeast or whatever's going on out there, prices are still kind of increasing. The median listing price, a little bit flat down here in the Midwest. Out Southwest and then in the Southeast. I actually don't believe this entirely based on our sort of micro region. And then in the Midwest, things are going well. Now, the second thing you can take from this is, remember, this is median listing price. So the cheapest place to live in the country is in the Midwest, right? Because the median listing price is what? 300,000, 306,000, I think it is. As you go out to the Southeast, which is here by us, now the median listing price is over 350. And then the Southwest. So you go all the way up here at the top, out west, handily beats everywhere else in terms of median listing price. Can you imagine that? Median listing price over $600,000. So thing number one, you can take the pace of acceleration of prices, slow out west. But number 2, the takeaway is they're still the highest priced, right? So rather pricey to live out that way. Best luck to all of you that do. Now, we could take this here and zoom in over month by month, right? So in other words, let's say this red line here in the Southwest. It looks like it's rolling over, right? But we're so far zoomed out, right? We're going back to 2017. We can't really tell if that's tipping or what's happening. So we zoom in and we go month by month. So we take that annualized growth or maybe deceleration, and then we go month by month. What's the rate of change month by month? So this looks really sloppy. But the line is still the same color. So I left it red. So in the Southwest, we can now verify, yes, prices are decelerating. So in other words, prices are losing on an annualized basis about 4%. That will not stay that way. And we can tell in the short term, of course, yes, prices have stabilized. We go back over here, you say, is that red line tipping over a little bit? Yep, we can zoom in and confirm, in fact, it is. If you look out towards the Northeast, prices still moving higher, nowhere near their highs, of course, not even near their, slightly above their average, actually, month over month. And so if we come back here, yeah, we can see that. That line is clearly going up. So don't let the chart mislead you. I tried to point out a few things tonight where you can see, all right, we can make the data look however we want, but here's an understanding of why it looks that way rather than me just try to say something about an area and say, prices are crazy over there. Let's just look at the data, but let's do it in the ways that we want so that we can see the minute detail of the change. That's all I was trying to do. So how about you? How's your housing market going? Is it still pretty competitive? I talk to clients all over and they go, pretty strong, man. At least prices aren't pulling back. They're holding up. Not a lot to choose from out there in terms of what it used to be, but prices are holding up because of that. And I think the data pretty much proves that. Now, this is not lagging data. Keep that in mind. Some of the real estate numbers that you get that may have come out already, like building permits, new home construction starts, contracts closed and things on new construction. Well, let's say it's June, that data would have been for May, right? Whereas Realtor.com is saying, hey, it took us 24 hours to pump all this data out. Here it is as of 24 hours ago. So that's why I like using their data a little bit more for, advising clients and such. What else do we have? Something about a sales pitch. Jazz Wealth, thanks for watching.